When I first became a mortgage broker, I thought I understood how I'd get paid. Lenders pay me commission, maybe I charge a broker fee. Simple, yeah? Well, it turns out it's not as simple as that. At first glance, the commission structure in our industry seems straightforward. You place a mortgage, the lender pays a proc fee, and you might charge the client too. But once you're in it, actually running appointments, chasing documents, submitted cases, and managing a pipeline, you realize cash flow isn't always as predictable as it looks on paper. And here's the thing I learned the hard way, which is understanding how brokers get paid is one thing, designing your entire business around it is a completely different kettle of fish. If you don't build it right, you will burn out. I've seen talented brokers work 60-hour weeks, close multiple deals a month, and still feel like they're on a treadmill, not because of the lack of skill, but because their earning model doesn't really support the life or business they want. If you don't structure your income properly, from commission splits to broker fees, you can actually end up stuck in a volume chasing mode, and that's going to be when burnout hits. And trust me, it can creep up really quickly. So here are a few of the most important lessons I've learned, and I now pass on to every broker I coach. Number one is know what you actually earn. So let's talk numbers. On average, prop fees from lenders range from 0.3% to 0.5% of the loan amount. A £200,000 mortgage typically earns a broker around £700 if the lender pays a 0.35% proc fee. Broker fees are going to range from about £495 to £995 per case, depending on your model and market. And insurance commissions can roughly bring you up to around 160 to 180% of the first year's premiums, making protection a serious income booster. And when you stack it all up, a well-structured case can earn a mortgage broker between £1,200 to say £2,500, especially if protection and broker fees are included. But this varies massively depending on how you run your business. The second one you have is your commission split matters more than you think. If you're self-employed under a network, you're likely on a commission split. And this is often going to range from 70-30 to 90-10, depending on your deal. But some newer brokers might be closer to that 60-40 split, depending on the business model. What I didn't realize at first was how much this eats into your income. A £1,000 proc fee on an 80-20 split means that now becomes £800. Over 10 cases a month, that's actually £2,000 a month. And that's quite a big difference. You need to weigh up the support you're getting from the cut and whether it aligns with the stage you're currently at. The third thing is charging a broker fee isn't greedy, it's smart. I definitely thought at one point that broker fees would scare clients off. But after doing it in my own business, I found that most people expected to pay something if the service was good. I did a flat fee of $595 and it became my standard. It created consistency in my cash flow, especially when lender commissions delayed. The fourth one is protection can level out that income roller coaster. Mortgage payments can be delayed for all sorts of reasons, but protection pays quickly and it pays often, and it can add a hefty chunk to your income. One policy might bring you, say, $800 to £1,500 if you're advising it properly. And I've had clients who are getting £5,000, £6,000 and £7,000 cases in some instances. You can also take this on the drip, which means you can start to create a steady income flow into your business. It's not just a bolt-on, it's a core income stream that every advisor needs. The fifth one is pipeline and paydays. One of the toughest lessons, a full pipeline doesn't mean a full wallet, especially early on. I'd be busy but still broke. Between long turnaround times, missed completions and cancellations, it was a cash flow nightmare. Now I teach my brokers to treat their pipeline like a forecasting tool, track it weekly, estimate income timelines and plan ahead. If you're a new broker or even an experienced one and you're feeling stretched, it's worth zooming out and asking, is the way I'm being paid actually sustainable for me? Because understanding how commission works is one step, but building your business around that reality, that's where things start to click. If you want to go into a deeper breakdown of commission structures and the income types, check out my video here on screen, which is how commission works for brokers.